Ladies and gentlemen, Kim here, and welcome to the Daily Update. Hope you guys had a good day trading today. Market is down about 1.7% there. The S&P Nasdaq did get hit a little bit harder today with a 2.4% negative along with the semiconductor. Dow 1.2. Russell 2000 did hold up a little bit better with the transport printing green today. Banks down about 0.5%. We do see that energy did get hit 3% negative. Biotech 2.3%. And healthcare is also down 2%. Their home builders is green along with the retail. Utilities down about 1.3 along with the emerging market. Bitcoin down 7%. Gold, silver, miners, these guys are up slightly with miners being down about 0.5% there. Dollar up, oil down, treasury bond down. VIX popped with a 15% positive today. Let's go to the S&P 500 ETF. Spider. 65-minute chart here. So this is where we closed on Friday, and we opened up right here this morning. So you can see we actually did see that down gap this morning, and this is not a good news for the buyers. And we talked about the fact that leaving a little bit of this down gap is gonna start up some trouble for the bulls. So they must get up there and fill this down gap as quickly as possible, which we talked about last week. Because if you don't, well, these bear troops, along with the boss bears, they're going to bring it down. And so it looks like on Friday, when we weren't able to, you can see how we did try. So you can see how this is a Thursday price action, right? That's a Thursday price action through that long shooting star candle there. Came down through the hammer, and this is a Friday right here, and Friday got rejected once again right here, leaving that down gap open. Right, I tweeted out that bulls must fill this down gap. Got rejected twice, and that's like having a little double top right here. And then when we did see that weakness towards close on Friday, bears obviously smelled weakness from the buyers on Friday, so gapped it down on Monday, totally taking advantage of the situation. And then all day today, you can see bears brought it all the way down with the almost 2% negative day. And this is what the bears need to do, bring it down about 2%. I mean, you need about 2 to 3% down day to really make the buyers tremble, right? Because any 0.5% down day is not going to make the buyers, shaking in fear. Well, today, definitely, bulls are feeling it. So what can we expect going into tomorrow and possibly this week? Well, obviously, the bad news is that the big boss bears gather many of their troops right now. This is a big down gap that hasn't been filled since January. And then that was a 10% down gap that bulls were not able to fill. And with that, bear troops continue to push it and continue to shoot all the bulls on sight. And with this another down gap, well, we got 3 down gaps now, and things are not looking so bright right now. However, if you're desperately seeking, and if you're a buyer here and you've been miserable in the last couple weeks and you're desperately requiring this market to make some move, well, we potentially seeing some help right here, because you see that midterm moving average, you see that pink moving average right here, and that's a strong pivot. And this guy, we're talking that midterm moving average, a pink dotted moving average right here. This guy does have impressive resume. And now bulls might have a chance to turn this midterm moving average as potentially a new support, because we're right on that vicinity. And I think just because we got these down gaps that have been opened up right here and some momentum that bears gather, you can see in the short to micro term, definitely we have this downtrend going on right now. And so I wouldn't be too caught up in the precise level of 438. you know what I'm going to do? I'm going to give you another level, but I'm going to give you a lighter level right here. I think about 434, right? Let's just kind of remove that right now. So you can see that I think that 434 in this vicinity is the band of support. I think the buyers need to protect, because you can see that was a prior kind of the resistance level 432, and right now that 438 level is going to be the strong support again, because that's that confluence zone right now. You can see here, support, resistance, 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 right? We're back at it. Not only that, that's a level we can see that my midterm moving average is residing. So that 438 is a strong level. What I'm saying is, because bears been cultivating this downtrend for the last 2 weeks or so, there is that momentum that bears are working with. What I'm saying is bear could potentially bring it down a little lower just to shake some people out, potentially getting back up. So, and also that midterm moving average is slightly rising for the first time. As you can see right here, it's been declining for like 2.5 months or so, right? So this is a rather good news. And obviously this thing could come right back down if the bears bring it even further. But let's say if the buyers can able to make that bounce and put pressure on the bears, this midterm moving average will be the key for the next, probably for the entire summer. For the entire summer. So you must understand, and you need updates on this midterm moving average, because as long as that midterm moving average is having that trajectory to the upside, mark my words, bulls will bring it up. But as of today, benefit of the doubt continues to go to the sellers, with my short-term moving average and the micro-term is supporting the bears. While we do not know as of today if the midterm is going to support the buyers or not, right? We must see how this market is going to react in this 438 and 434 vicinity. Let's check out that oscillator and see if we can extract any more information. So this is what we talked about. Bulls totally flopped that, bullish divergence chance right here, right? We talked about the last week. But the biggest problem was that the bearish or that oscillator resist. This is not a coincidence. This is not a mistake. This is not an accident. This is not a random occurrence. That when the oscillator got up here, when it got rejected, well, bears brought it down rather hard today, right? And with that, you can see my short-term moving average is also agreeing with my oscillator. So you can see short-term, the micro-term, and the oscillator resistance. They're all teaming up to support the bears right now. And another bad news right now is that with that bullish divergence support, it looks like we slightly gone below it. Only way if bulls can kind of turn things around, they need to, because right now we closed on weakness on the last hour today. So this is what it looks like. But let's just say if we do see some sort of a shenanigan gap up or shenanigan up move tomorrow, and this thing gets up right back up and feel this down gap from this morning. Let's just say that's what happened tomorrow. Gap up and bulls just brought it up all day long. This thing could potentially look like that. That means, you know what that means? That means that bullish divergence still in place. So bulls need a miracle gap up or some sort of first hour push and then continue to push all day long tomorrow if they want to see that bullish divergence to continue to support the buyers. If not, if bears bring this all the way down to the bottom of its band, things could continue to look hectic. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good luck trading tomorrow.